Hello everyone. This is the pre-market report video for today, 13th March 2025 for the Indian stock market in terms of Nifty and Bank Nifty. Yesterday, after the market closed at 4 p.m., Indian government released the India's consumer inflation for February month. So, after 6 months, inflation dropped below RBI's target 4%. It came as 3.61%, which was less than the analysts expected and also less than the January month inflation. In the last July and August month also, inflation came below 4%. But at that time, the lower inflation was primarily driven by low fuel price. But this time, food inflation also dropped. It was also less than 4%. Last time, food inflation was this low in April-May 2023 period. So, almost after 2 years, food inflation finally fell below 4%. Hence, it's very positive news and huge encouragement for RBI to cut the interest rate. If required, please pause and have a look. This is our inflation breakup into sub-function. Please look at the vegetable section. It was mostly about 20%. And for the first time, it was less. Actually, vegetable price on February month decreased by 1%. In addition, all others, clothing, transport, housing and medical, all were reasonable increase. Here, some might argue this much drop in vegetable price, isn't it due to demand drop? If so, then isn't it negative for the stock market? I'm not sure how stock market will take this number, but vegetables, cereals, all those essential for living. So, I don't think it's due to demand drop. I think the drop due to the supply increase. In addition, having Trump as US president, we can confidently say he won't allow the oil price to increase crazy, which all will be a strong macro suggestion for RBI to perform more rate cut this year. The only thing that was not favor for RBI rate cut will be banks' slow deposit growth. That too, now having this strong correction and volatility in the stock market will make the people to encourage and move their money back to banks deposit. Hence, this consumer inflation for February month is very good for both Indian economy and stock market. Now moving to US, before their market opening, they too released their consumer inflation data for February month. If required, please pause and have a look. The top two is core inflation and the bottom two is overall headline inflation. As we see here, in all metrics, month-on-month basis, year-over-year basis, all came less than analysts expected as well as less than the January month. So, US market also reacted positive for this. Here, one more thing. Next week, Fed interest rate decision is due on March 19th. I personally think this low inflation is immaterial for them and I don't think they are going to cut any interest rate. Either way, last night, US market took this low inflation as positive and reacted as positive. But how can we proceed our pre-market video without talking about Trump influence? Yesterday he implemented 25% tariff on all the steel and aluminum import which coming into the US. As a retaliation, Canada announced 25% tariff on 30 billion Canadian dollar worth of goods from US. Then from Europe side, again as a retaliation, they also announced 25% tariff on 28 billion US dollars worth of goods from US to Europe. Here, please note, US implemented it. From last night, all the steel and aluminum got the tariff. Canada said their tariff on US goods will be effective from today onwards. On the other hand, Europe's tariff on US goods will be effective from this month end. So, because of this tariff, Dow Jones alone closed negative by 0.2%. S&P 500 increased by 0.49%. Nasdaq was up by 1.22%. In case of US VIX, it dropped by 10% and moved below 25. Then coming to oil, US inventories data showed that they have the stockpile of 1.4 million barrels, which was less than the expected 2 million barrels. So, oil price increased to 2% compared to Tuesday night. At the time of this video, WTI crude trading near $68 per barrel and Brent crude closed at around $71 per barrel. Regarding Indian ADR, both the IT stocks again further down significantly. Infosys ADR was down 2.5% and Wipro ADR was down 1.3%. On the other hand, both banks increased around 1.5%. Yesterday before our market opening, Morgan Stanley downgraded the Infosys from overweight to equal weight. Then for Wipro, it's even worse, downgraded to sell rating from previous neutral rating. Hence, yesterday in Indian market itself, Infosys was down by 4%, Wipro was down by 3%. So now if we compare the ADR with Indian spot, for both IT stocks, the arbitrage with the dollar premium is flat with some negative bias. On the other hand, ICICI Bank ADR got the positive arbitrage of 1% and HDFC Bank ADR was neutral. Then about GIFT Nifty, early morning today, it traded at 22,556, equating that with the spot market. For now, it's indicating the gap up opening of 30 to 50 points. Then moving to new India related stuff, yesterday in the aftermarket hours, major oil research companies released the report that the Russian crude oil shipment to India increased back to 1.54 million barrels per day. I mean, on Jan and Feb, it was dropped due to Biden's sanction before he left the White House. Having back Russian oil at the cheap price, it's good for oil importing companies, maybe for Reliance. Let's see. Second, another positive macro that released yesterday evening along with this good consumer inflation was India's industrial output growth. Now, regarding the data for January month, it increased by 5%, more than December month and more than the analyst expected. The industrial output growth was primarily driven by manufacturing, so we can expect market to react for this as well. Moving on about institution, in the cash market, FI net sold for 1,600 crore rupees and DA net bought for 1,500 crore rupees. And if you see the open interest analysis, both in the index option and index future market, it's same as Tuesday closing. If required, please pause and have a look. Only mild percentage change. Hence, overall, obviously, FI will make more money if market goes down, whereas both the retail traders and proprietary traders open interest signals they want the market to be neutral with positive bias. As a summary, US market closed positive despite the fact Trump implemented the 25% tariff on both steel and aluminum. I'm not sure why market didn't react that much for it. Either way, we got lot of good macro, consumer inflation number and good industrial output growth, etc. So in line with that, for now, GIFT Nifty indicating the gap up opening of 30 to 50 points. Regarding the things to look out, there is nothing that I'm aware of is scheduled before and during our market hours that can influence our market. Then in the night for US, their weekly jobs data, wholesale inflation data and 30-year note auction are some of the things we need to keep an eye out today. One more thing, tomorrow our Indian market will be on holiday, so possibly we can expect short covering or profit booking since there is no chance investors going to trust Trump that he is going to keep quiet for 3 days. Coming to technical, Nifty opened 40 points gap up but soon erased all the gains and turned negative as the day progressed. Then it recovered almost all the losses but still closed below 22,500. Thus on the daily chart, Nifty formed a bearish candle with a long lower shadow indicating buying interest at lower level. I mean, Nifty tried hard to sustain above 5 and 10 day exponential moving average and climbed towards the 20 day exponential moving average and midline of the Bollinger Band but failed multiple times, which is negative. But one positive thing is both daily and hourly momentum indicator had a positive crossover. Hence, overall, Nifty has been stuck in the range of 22,300 to 22,700 for almost a week now, which needs to breach on either side for a firm direction. If it decisively breaks 22,300, sharp selling pressure is possible, which could take Nifty down to 22,000 to 21,800. However, as long as Nifty stays below 22,700, consolidation may continue as only sustaining above it can open doors for a strong up move towards 23,000, but that seems less likely in the near term. In case of Bank Nifty, it also opened 40 points gap up and increased for the third straight session, then closed at above 48,000. Thus on the daily chart, Bank Nifty formed a bullish candlestick pattern with an upper shadow indicating some pressure at higher level. I mean, Bank Nifty managed to defend 47,800 on the closing basis for another session and also managed to negate the lower high lower low formation, but still sustained below all key moving averages, which is negative. Hence, if Bank Nifty holds above this level, it can increase to 48,800. On the downside, 48,000 to 47,900 zone is the key support level. As per the weekly options data, the maximum call option openness was at 23,000 strike, followed by 22,600 and 22,900 with maximum new call option rating at 22,550 strike and then 22,600 and 22,500. On the put side, the maximum open interest was at 22,000 strike followed by 22,300 and 21,500 with maximum new put option rating at 22,300 strike and then 22,350 and 21,750. Thus, from options data, we can expect Nifty's key resistance at 23,000 level with key support out at 22,000. So that's all in this video. Hope you all got some information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.